And then the innovation has been um, focusing on uh, a segment of the market that's really overlooked by most institutional investors. Most real estate investors invest either directly in assets or through funds that are focused on large trophy assets. For example, our Korean clients are only invested in central business district office investments, with the exception of the investments that they do with us, which are sorry, very different, provide broad diversification for them. What's also different about us is how we're structured, because our focus on the middle market means we're looking at almost 3,000 transactions per year in our middle market business, which is a much larger number of deals than most investment platforms review. Now, how's that possible? How do we do that? First, there are about 35,000 transactions done in a typical deal in the US year in the US. If you look at the numbers, basically about half the capital for transactions above 70 million, half is below 70 million. However, the number of transactions, 90% are below 70 million and only 10% are above. So while most people are focused on the 3,500 large transactions, we focus on the sector of almost 32,000 transactions below that number.
So I appreciate it. Final question for me is really around the um, this universe of mid-market managers. What does that look like? It's often hard to find. If you go to most of the US real estate databases, whether it's Preqins or Green Streets, etc., there's no one has a category called mid-market. It's not like you can say, well, show us this or show us that. So for a lot of our investors, they're asking, well, this mid market is new, but when they try and find out about it themselves, it's often quite hard to get really comprehensive, great data on it, etc. So, what does the universe of the mid market manager look like, and why? Why is it that there are not these extensive databases and sources of information? It's almost like a really top tier mid market manager is a hard beast to find.
Well, it's interesting. Um, this is both the opportunity and the threat for our business. The opportunity is that, we have this large, deep market, lots of investment opportunity. The threat is that the actual underlying providers of the capital are not focused on this. They don't wake up saying, I need middle market exposure.
Yeah.
Contrast that with the private equity world, where people have large cap, mid cap, and small cap private equity firms that they back. And that's also the way the public equity markets align. So there's strong confluence on that side of the world. I think there's a couple factors for why there's not a lot of middle market managers in real estate. One is the consultants don't make money on small or mid-sized funds. A consultant, unfortunately, is their businesses. They write a report. They write one report on a manager and sell it to multiple clients. And so it's only really possible to do that when you've got very large funds. Well, a very large fund, quite frankly, is the opposite of what a middle market approach makes sense. If you have a 2 or 5 billion dollar fund and your average check is $8 million, good luck putting that to work, right? So that's one challenge. I think the other challenge is really just an operational and profit challenge. We're members of NAREIM. NAREIM is the National Association of Real Estate Investment Managers. We're super involved in neighboring because of the data. There's about 120 investment managers who are members. And there's one survey that covers employee compensation. And then there's a firm survey where we get all the key performance indices for all these firms. And what's clear is that the bigger the firm is, the better their margins are, and the bigger the deals they do typically because of operational leverage. So, for example, if you buy a $500 million office building, you have one asset manager and one junior asset manager on that deal. Pretty good margin. If you buy, if you buy a $30 million, a $30 million asset, the amount of work isn't necessarily dramatically different, but the margins for the manager are dramatically different. So investment managers skew towards where you make more money. Everybody responds to, economic incentives. And so there's not a lot of people who are focused on it. It requires a very different approach to investing. And, our margins don't compare to many of our peers as a result, because it's just not as efficient a business.
Understood.
But if you look at our performance, I would say the consistency of our performance puts us in good stead versus our competitors. So.
Yeah, about a comment, I think, and that's really the opportunity. If I'm wearing an investor's hat, it's about what are those returns comparables, and where's the opportunity in the mid market. So 100% agreed.